Welcome to Markets Now. I'm Michelle Rook along with Jim McCormick with agmarket.net, and a down day in pretty much all the commodities sector. And Jim, how much of that was just risk off that hit the entire complex, and what was the risk off today?
Well, I think a big chunk of it was a risk off. The reality is you had a job openings number that came out this morning that showed that job openings are dropping, which means the economy is slowing down. And that seems to, Michelle, have caused a lot of asset managers across all classes, not just commodities, but even in the stock market, all kind of move to the sidelines as the risk of recession is coming back in front of us. And, when the OPEC cut production over the weekend, it just made the Fed's job of trying to land this plane without putting us in a recession that much harder. And like I said, this JOLTS number really spiked the market down, and we do have a big jobs number at the end of the week as well. So we've got more macro data coming at us, and more than likely it's going to be more negative than bullish.
Yeah, we just get past one macroeconomic or black swan event. It seems like there's another one right around the corner, isn't there?
Yeah, there's no doubt about it. I think Jamie Dimon was out talking, worried about more banking events. And, the reality is it's kind of moved to the back burner, but there's still a lot of crisis out there. Like I said, with the Fed having to raise interest rates more than likely to continue to fight disinflation, that is going to put more pressure on the banking sector. Yeah. And that's just going to make, markets nervous. And when people get nervous, what do, Michelle? They tend to go to the cash.
No doubt. And we started off the day, though, lower already in corn and soybeans this morning. And I think some of that looked to be maybe some profit taking. Had we run up into some chart resistance there, Jim?
We did fail at the resistance. I mean, we had what was a friendly report for the most part. At least some people construed it on Friday. We surged, but like corn, decent corn couldn't get over that little double bottom at 83 on the January chart. And, the weather patterns have changed a little bit as well. I mean, when we went home on Friday, I think the headline was the quarterly stock number, but it was also the forecast. The Northern Plains people up there obviously are dealing with a lot of late winter storms, 1 to 2 feet of snow. But, since that happened, the longer range 6 to 10 day and the 18 to 14 day maps are now turning above normal temperatures. And it looks like we come out of the long Easter holiday weekend, a lot of seeds going to be put in the ground relatively quick.
Yeah, and you and I talked about that last week, that once we got the reports out of the way, weather was going to be the full force. It was going to be coming at us in terms of market action. It was kind of sad to watch as well, the fact that wheat lost its early gains. I mean, some of the lowest crop ratings we've seen in history, 28% good to excellent is all. That crop is in tough shape.
Well, that's it. I mean, the market did try to bounce on that number, but the reality is the funds are just relentlessly selling the wheat complex. They're short the wheat, and it seems like they're comfortable being short the wheat at this point in time. I'm not sure what's going to shake them out of it. I do think it's a problem. When I talk to our clients, especially in parts of Kansas right now, they are very worried about what type of crop they'll have, as any. I mean, they're getting a lot of heat, they're getting a lot of wind, and the crop is dying before their eyes. So eventually, hopefully, the market will essentially trade it. But right now, it is the weak link of the spread, and the funds just continue to add to those shorts, unfortunately.
Yeah, plus you're going into a 3-day holiday, and then you've got reports coming up already next week.
Exactly. We are closed Friday for the Good Friday holidays, and then you have those reports on the April WASD. Those numbers can be a little bit volatile. I mean, what they'll take is, it won't be the acres numbers because we don't get the new balance sheet, but the old crop balance sheet will adjust for those quarterly grain stocks, which were actually a little bit friendly. So it is going to set us up for a little bit of volatility. And if you look what the market did today, Michelle, we were down, but the bull spreads really worked well. Okay. Essentially, you saw a lot of buying of the May corn against other contracts and buying the May beans against other contracts, which tells me maybe this market is bracing for what they're thinking is going to be a bullish report next week.
Yeah, and the bull spreads and the cash basis levels look like they're doing all the heavy lifting then. Let's also talk about the cattle market, because we're down again here today on the close, and it looked like we put in a key reversal yesterday. Did we confirm that with today's action?
Well, it was weak right now. The cattle market's kind of an interesting dynamic. If you look at the supply situation, by all accounts, Michelle, the supply is going to continue to tighten. But where the market gets these waves of selling is they're very worried about the consumer demand right now. Like I said earlier, when the Saudis essentially decided to cut, or Saudis plus in essence decided to cut oil production, it's going to drive the price of gasoline 25 cents higher is what I've heard people report. That's 25 cents a gallon people don't have to spend somewhere else. And what you tend to see is they tend to shy away from the higher cuts of meat as they try to balance their checkbook a little bit more. And I think that is the repercussion you saw. That JOLTS number spooked the market as well. And this cattle, don't be surprised to see a little bit of a defensive selling near term. But with a tight supply, I don't think it's going to fall out of bed. The reality is, as a whole, the economy is still doing quite well. If anybody who's on spring break, they know the beaches are full, the hotels are full, the airlines are full. So the consumer is continuing to spend. If he continues to spend, that should be somewhat supportive, I believe.
Yeah, and it seems like the pattern that we've been developing is we make new contract highs, we see some consolidation, and then as soon as we get higher cash, then we shoot back up, don't we?
Exactly, because the market is looking at this supply is going to tighten. And if you can get a higher cash, the belief is it's showing that the consumers are continuing to spend. Like I said, we've still got the grilling season to come in. It's been a tough season. And like I said, if you look at the forecast, I mean, at least across the Midwest, they're talking much above normal temperatures as we move into the latter part of next week and the week after. So yeah. I think you will hear more people talk about pulling that grill out and maybe getting an early season barbecuing going in.
Okay, and then we'll talk about the hogs. So we left the worst for last, as usual, but hogs, another down day, and I get it. Slaughter figures are above a year ago. That's been weighing on the cash and cutouts, but the funds are already record short. So how much farther are they going to push this thing?
That's $1 million question, Michelle. It's kind of like the wheat. The funds are short wheat, they're short hogs, and it's just like that is the wheat leg of the complex. And it seems like whenever there's any kind of news negative, they just keep piling into it. Now, they will get out. I mean, history does eventually, they will reverse. They'll get to the point where they say enough's enough. But, as you mentioned today, they're obviously not done selling because you'd think a lot of the bearish just is priced in, but obviously it was not today.
Yeah, keep waiting for it. All right, thanks so much for joining us, Jim McCormick with agmarket.net, and that's Markets Now.